Joining us now on set is Alli McCartney. She's managing director of UBS Private Wealth Management. You know what's so funny about market sentiment is literally yesterday it was like healthcare's dead.
Yeah.
Just forget it, you know. And then today, look at Thermo. Look at some of these results and suddenly, and now I feel like I've missed the trade. It's been one day, right? So
that's where this market is, right?
Yeah.
You have institutions that are pretty much resigned to staying where they are, seem to have very little conviction to buy, very little conviction to sell. And then you've got this retail FOMO thing back. You can see it in the meme stocks. You can see it in retail numbers. And so it's this really strange point in time where we are at the first percentile in history in terms of valuations. You had an individual on that said, we've seen that twice in my lifetime. One was a week during the pandemic, and the other was the internet boom. So there's certainly reason to be cautious. But then at the same time, that list you gave from Morgan Stanley, that was a very varied list, right?
Yeah, dog food, NVIDIA, a bank.
Exactly. So
Southwest Airlines.
So that's what I'm saying. So breadth is definitely coming back. And we have entered a stock-specific environment that probably, it's still going to be driven by the Mag 7, right? The Mag 6 right now are 25% of earnings. Downshifting, maturing, moderating, but still, you know, making up a quarter of that number. So I think there is a broader opportunity. I think there is a point right now where we can both be bullish and mind the downside.
Well, Kelly made as usual, great point earlier in the show when we had a guest on us talking about small caps, and you sort of alluded to the fact that you know, people get burned by every time we hear small caps are back.
Yes.
Or it's like the Cleveland Browns are going to be good this year, and then they're not, right? No offense, I love Cleveland, but it's you get the idea. If these sort of unloved stocks, we always hear they're back, and then it kind of feels like the economic rug gets pulled out.
Know this from energy. Another marquee space where that's been the case over and over again. So energy, healthcare, these space. How do you know if it's
burned?
Not a value trap?
I think one of the problems with it is that there's the should of investing. This should. Small caps should have had a great run during all of the trade issues. They're largely domestic. They largely sell domestically and source domestically. So they should have behaved differently during the lows after Liberation Day than they have. Healthcare, we spend more on healthcare than any other developed nation. We just, you know, in the big, beautiful bill, made clear that we're taking Medicare away from some of the medical social safety nets, which should be a boon for some of the healthcare companies.
That's a dirty word, though, the S word, should.
That's what I'm saying.
What's the movie? Please help me, somebody. Getting old. Deserving got nothing to do with it.
Yeah.
Right? And that's the cruel reality of this stock market, or any stock market, is that things that should make sense, or that should, or I deserve to do. No.
So let's take away from should and let's talk about where the earnings are, right? The issue that everybody's talking about with this market is the only way that we can sustain and grow from the 63.30 that we're at now is for earnings to get bigger, right? Earnings to grow. And so how does that happen? That doesn't happen because of tariffs, right? That's going to, in some way, harm the consumer at some point and harm the producer. So what do we have? And you've been talking about them. Automation, AI, spending on the big, beautiful bill. Those things can grow earnings. And the areas in which I see earnings growing are financials, are healthcare, largely because of what you and I were just talking about in terms of what AI and biotech have done to the drug development cycle, to potential profitability. And so, yes, there may be in certain areas more risk, but I think there's also more opportunity than playing the areas that have always and traditionally worked, whether they should or not.